Hello, everyone, and welcome to episode number 79 of JustDario Cigar Time. As I'm recording this video, it's Asia morning of Friday, the 29th of May. This week, I decided not to wait for any weekend developments because so much already happened in the past 72 hours. That's very important information I want to share with you that cannot wait. In the first slide in front of you, you can see the chart I presented in last week's podcast about the very timely oil price manipulation that occurred roughly 15 minutes before the US EIA crude and gasoline inventories report was released on the 20th of May. And now in this second chart, you can see what happened yesterday. I know it's hard to believe what you are seeing, but yes, the exact same playbook has been used to manipulate oil markets 1 week later. The fake news about the US and Iran reaching a deal, but just needing Trump's final approval, according to US officials and regional sources involved in the mediation effort, hit the tape few minutes before another very important US EIA oil inventories report. And as you can see, the first reaction to that report was that US crude oil and gasoline inventories continued their freefall. And here, in the next slide, you can see the details of what they wanted to hide from the public eye. The EIA reported 17.4 million barrels of oil were drained from US commercial and strategic petroleum reserves, crude oil, and distillate inventories last week. This is a huge amount already in normal times. But considering we are going through the worst supply crisis in history, covering up this essential information instead of duly reporting it to people, allow me to say this, is just criminal. People are being convinced that there are so many SPR barrels available around the world that the problems in the Strait of Hormuz can remain unsolved for many, many weeks, and no one will feel the pinch in their daily life. Well, as industry experts, insiders, and I have been warning since the very beginning, the situation is completely the opposite. In order to understand why we are very close to a breaking point, it's very important to understand the concept of the operational minimum for oil inventories. In this next session, I'm going to focus on US oil inventories, doing my best to keep things easy to digest. But you can actually infer the same for all other countries on a proportional scale without missing the mark by too much. The operational minimum for US oil inventories refers to the lowest inventory level at which the physical supply system, pipelines, storage, tanks, terminals, and refineries can still operate without major logistical disruptions, tank bottom issues, or reduced functionality. In simple terms, below that critical level, the system risks breakdowns in liquidity and operations, even if oil stocks aren't literally zero. That level is 380 million barrels. Currently, we are at roughly 440 million barrels. To give you a sense of how close we are heading towards the cliff, yesterday a major oil executive during a conference went off script and warned outright of the incoming danger. Isn't this going completely against what we are hearing from, the US administration, the mainstream media reports, and whatever? Of course it is, because they're hiding the truth. Allow me to read out loud what this executive exactly said, because I believe every single word matters. Commercial inventories of crude oil, of liquids, think petroleum, gasoline, diesel, jet fuel, they have all run down. Running down those inventories has been mitigated or offset, supplemented by the release of strategic petroleum reserves, which most of the Western countries have done. All of that has mitigated the impact of the oil shock. You can model this. We modeled. I think a lot of people in the industry have modeled it. We are approaching unheard inventory levels. I mean, really, really low levels. You can debate whether that's going to hit those really low levels in 2 weeks or 3 weeks. Once you get to that point, then you see the price, boom, shoot up. I mean, think dated Brent. Most people, well, a model would say that Brent will shoot up once you get to the really low inventory level up to $150 to $160. The models will tell you that. And then what happens is when the price gets to a certain level, demand destruction brings it back to balance. Prices go so high it becomes unaffordable. And that's what happens. And I think crude oil being in this sort of $90 to $110 range for the last whatever it is 6 weeks has really been mitigated by running down inventories. It can last forever. So we'll see what happens, and predicting this and the exact timing is always a challenge. But that's the way we see the picture. I mean, it's worth a clap, right? And if this wasn't enough, yesterday, prior to all the oil price manipulation shenanigans and this statement from the US oil executive, we even got an explicit warning from the European Union saying that the jet fuel market is expected to get tighter if the situation in the Strait of Hormuz doesn't improve soon. And allow me to take a small credit here, because as you can see on the bottom right of the slide, I posted on X earlier this week. And I didn't feel shy, as usual, at all to say, Japan and Europe will not be able to wait much longer. Both will soon be forced to announce fuel rationing restrictions. Otherwise, if they don't curb summer consumption hard, they will have serious problems making through next winter. Feel free to bookmark that. I want to conclude today's podcast with a reminder that the US has been sending its strategic petroleum reserves to its allies in Europe and in Asia to buffer the supply shocks in those regions created by the disruptions in the Strait of Hormuz. Effectively, the US is selling oil cheap to the rest of the world as a payback for the mess it started in the Middle East. That's the reality. Hard to digest. And you will hardly hear this openly on mainstream or social media. Furthermore, the US cannot continue doing this indefinitely. As we saw in today's video, in about 3 weeks, markets and commodity traders will be forced to acknowledge that this historical oil supply crisis will be long lasting and not just a bump on the road under the assumption that the Strait of Hormuz can swiftly reopen. And then it will quickly be business as usual as it was on the 27th of February. A state that maybe will never occur again, because 3 months ago, we might just have experienced one of those moments in the history of mankind when a structural event occurred, and that event shifted the geopolitical balances so much that a new era started and an old one ended. Thanks a lot for listening to my podcast today. If you enjoyed my content, don't forget to like the video, subscribe to my channel, and turn on the notifications if you don't want to miss any of my future updates. Thanks a lot for supporting me on X, on Instagram, and for reading my research on JustDario.com. I wish everyone a nice weekend. Bye.